Welcome back, everyone. We have an update from Gold Terra Resource Corp, which trades on the OTCQX under the symbol YGTFF and on the TSXV under the symbol YGT. It's a junior gold exploration company that's assembled a highly prospective district-scale land position of over 800 square kilometers of contiguous land immediately north, south, and east of the city of Yellowknife in the Northwest Territories. Please welcome its CEO, Gerald Panneton. Nice to see you again.
Thank you very much, Anna. It's a pleasure always to give an update again, and thank you for your time. And with all of this, we'll be jumping and then giving you the information on what's happening with Gold Terra. It's been only a couple of months that we've talked again, as for people who may be new to the story or people that have listened to some other podcasts. Our strategy is very simple. We're looking for high-grade gold in the Northwest Territory, in Yellowknife. We are basically supported by all the infrastructure that the town of Yellowknife, a city of 20,000 people, that allowed us to explore very cheaply for less than $200 a meter. We currently have approximately combined resource of 1.8 million ounces between some small open pit north of town, as well as the Con mine, which is under option from Newmont. Our goal is to reach 2 million ounces altogether in one place at the Con mine to be able to put back the mine in production and use our satellite deposit to have a better production profile. Currently, we're drilling a deep hole, and with all of this, I'm going to go and inform you about the town of Yellowknife, where we are, and what is the Con mine in reality. On the current slide, what you have is a beautiful, large property portfolio that cover the Campbell Shear. The Campbell Shear, as you probably do not know or may have known, is a plumbing system. It's a shear zone. The shear zone is 70 kilometers long, was mined over 5 kilometers, which is only, barely 8% of the property, and produced 14 million ounces at grade of 15 to 22 grams between two mines, the Con mine and the Giant mine. The Giant mine is under a huge federal reclamation system or process that is ongoing. And the Con mine, which was purchased by Newmont in 2008 via the Miramar, is a property that Newmont never spent a penny exploring or developing or looking at there's any gold left. Our interpretation of the camp is worth looking at many multi-million ounces potential, whatever it's north of town or the Con mine. The Con mine was important because when you look at the Con mine, you're looking at, having exactly 6 million ounces produced between 16 to 20 grams. 16 to 20 grams is half an ounce. It's worth like $1,000 per ton. So it's got a great value in terms of operating, especially when you can do mining in Canada for about $200 per ton. And you can see the picture here. The town is at the back of the Con mine property. The Con mine has existing infrastructure left on site. That could probably be valued at $200 million in total. But more importantly, it's a brownfield project. It's industrial site. So we are not, if we open the mine and put a mill back onto the Con mine, we're not going to do something, basically damaging the environment in a new place. We're basically reopening a brownfield and industrial site. Very similar to my story of Detour Gold when we purchased the Detour Lake asset in 2007. We basically end up with the surface lease purchased from Goldcorp Canada. And then it allows us to move and streamline the processing, the process of permitting the project much faster than in the greenfield environment, especially also that we have all the infrastructure of the Yellowknife camp. So when you look at what we have here, we do have a very good property, which is quite large. You can see the Con mine, you can see the workforce, 20,000 people is really available. There's hydropower or green power. And of course, there's airport roads. This is not inaccessible. And that's the reason why our $200 per meter Canadian is very important. Now, when you look at the surface map and the little property of the coal mine, it's very small compared. It's barely 20 square kilometers compared to our 800 square kilometers property. But it does host the Campbell Shear. And what's very important about it, when you look in the long section, which is a vertical projection of all the drill hole compiled on the mine site plus the mining itself, you can see where we have outlined some ounces near surface. Already in our target of 1.5 million ounces, we've achieved 1/3 or 540,000 ounces, and basically at a cost of drilling of $6 per ounce. So we spent $3 million and then outlined 540,000 ounces. Since then, we've already added another 10,000 meters of drilling in 2023. And next year, you should expect an update resources. Currently, our drill are sitting at the target that we outlined as one of the best target on the coal mine property. At first, we wanted to outline some ounces near surface, but the next target, which was more important, which probably could be somewhere between 1 to 3 million ounces of gold at 15 grams, was underneath the mine, where existing access with the Robertson shaft can allow us to drill deeper, because we already have an access that will take 3 years to get there, of 1,900 meters below surface, or 1.2 miles below surface. And this basically target is where we drill our first hole, about 200 meters below a stope that was quite spectacular. It had grade in that stope, which was mined at the end of the year, life of mine, up to 500 grams over 20 meters, 80 grams over 7 meters. A very rich stope, basically, that was mined in the later year of the mine, when gold was barely $350 an ounce. The mine got shut down right after that, and they never explored below. So when we decided to go do a deep hole that you can see on the current slide, you could see that we intersected 200 meters below the continuity of that zone, right very next to the Robertson shaft that goes to 1,900 meters, and show that this Campbell Shear, which is 70 kilometers long, 50 to 100 meters in width sometimes, doesn't go away. It's still there. And the potential is about 1 million ounces every 200 meters vertical. So you can imagine our excitement about drilling the hole, intersecting gold, which is about 13 grams over 1.7 meters, which basically is like the minimum economic cutoff you will use to mine underground, about 7 grams over 3 meters. And we were successful intersecting this. And so we're very happy about the result of our project and the result of what we've been able to do and intersecting the Campbell Shear 200 meters below. Our next step next year is to drill another master hole, because the current hole will have approximately 4 to 5 wedge cut. We call that wedge cut, which means we drill a master hole all the way down to about 2,200 meters. And from about an elevation of about 1,600 meters, we do some wedging, basically, and reach and add more intersection into the Campbell Shear, which allows us to demonstrate continuity and also help us build a resource. And eventually, when this 4 or 5 wedges will be completed, we will be moving into a much deeper hole at 2,500 meters vertical, 600 meters below the shaft, and then drill a hole that will allow us to do probably another 15 to 20 cuts. And then the resource, or the expectation that we have, is that we will be able to outline somewhere between 1 million ounces to 2 million ounces of gold. At the end of the day, this is a very easy target. It's not like, it's just a matter of having the money and to drill it, because the target is very simple and very reachable. And with all of this, it's been about a quick 10 minutes update. I can talk a little bit more, but if there are any questions from the audience, I would like to be available to answer some of that. If not, then I will carry on with the presentation and our north of town target that we have.
Well, thank you for being cognizant of the time. Let's get to some of these questions, and then we do have to move on, but I'm so glad you came on with this update. Gerald, a question from Joe. Joe asks, are you going to go into production, or will you outsource when it comes to it?
It's always an interesting question. My job is not necessarily to go in production. or try to sell the property or try to attract people, investment. My job is to create shareholder value for the shareholders. And then I've done that 3 times to put mines into production, twice with Barrick, once with Detour Gold. And, you know, a lot of people ask me to the Detour Gold story, how come I could never sold the company? I said, listen, it's not about selling the company. It's about creating value. Selling the company is about doing it all together as shareholder. We all vote in favor. My job as a CEO leading this company is to find as many answers as I can to make ourselves as attractive or as solid as a company to put it in production or sell it. We have optionality because I've built 3 mines, I can do it again. But if somebody comes 2 years from now and wants to buy the company and we're making enough money and we all decide to sell it, we'll sell.
All right, sounds good. Another question from Joe is, what will your cost per ounce be if you stay organic or outsource?
Well, if you outsource, you use a contract mining, you know, there's no mill in Yellowknife. So we have to build a brand new mill. How much does cost a mill? Say the mill costs $200 million, just for the sake of it. So if the mill costs $200 million, and I find 2 million ounces, your mill costs basically $100 an ounce. So operating costs in Canada are roughly around $800 to $1,000 Canadian, which is about, say, $800 US. So when you depreciate the investment of building the mine, when you have your operating costs and you include your sustained capital, I think it should be somewhere around $1,200 to $1,300 US all in, which still give you, in today's gold price, a very nice margin because of the high-grade nature of the deposit.
And Paul wants to know, when is your next study or result report expected?
We'd like to do more drilling. We currently have done almost 10,000 meters in 2023. We'd like to add another 6 months of drilling at least, and then come up probably in the summer of 2024 with an update resources. I mean, these update resources are costly. We've already done 3 in our company, 19, 2021, 2022. And I think in 2024, we'd like to do the update resource, but followed by a preliminary economic assessment, which is basically the synopsis of a PFS or a pre-feasibility study. We know enough about the project that we could probably deliver something very solid that would indicate to the market how solid the project is.
All right. Well, thank you so much for this update. We look forward to seeing you in 2024 with some more updates about all this progress. Thank you, Gerald, for joining us today.
Thank you very much.
All right, everyone, stay with us. We have another update with Theriva and GeoVax Labs. We'll be back.